trade with a trend. That's what you hear all traders talk about. So what if you have a bullish structure on the higher time frame and bearish structure on the lower time frame? This normally confuses a lot of traders. And in this video, we're going to look at that by looking at market structure in relation to the different time frames that we have. We're also going to look at reversals and when to expect reversals, when to anticipate retracement, and we are also going to look at how to look for high probability trade setups using market structure. So make sure you watch this video till the end. If you're new, please hit that subscribe button. If you like this video, don't forget to give it a thumbs up. So let's just look at the basics of market structure before we proceed. So we normally have two types of market structure. We have a ranging market and a trending market. So a ranging market, this is a market that is in a consolidation and there isn't really a movement in the market towards one direction. Then we have a trending market. So a trending market, this is a market that really moves towards one direction. We are either bullish going up or a bearish market. So this is the kind of market that you want to participate in because it gives you a lot of better trading opportunities compared to a ranging market. So we are going to majorly focus on trending markets. So if you look at the trending market, we have two types of trending market. We have a bullish trend and you have a bearish trend. So a bullish trend, this is where the market continuously moves high. And in the process of moving high, we are breaking structure to the upside, making higher highs, higher lows, higher high, higher lows. So anytime we make a new higher high, at that point, that is when you get BOS. So BOS is break of structure. Anytime a new higher high happens, that's when you get a break of structure. And then you get the high low. So high lows, this is a retracement or a pullback. This is where the market is retracing back to its range. For a bearish trend, it's the opposite. The market is continuously moving lower. And this movement of lower again, the market is making lower lows, lower high, lower low, lower high, and we are breaking structure to the lower side. So anytime a new low is met, that is a lower low, and that is structure broken to the lower side. So when should you expect to see this pullback or retracement? You always want to see a pullback or retracement after the market has broken structure. So in this case here, you can see we have made a new higher high. We broke structure to the upside. So in this case, at this point, this is when you anticipate a retracement or a pullback to happen before we do what? Before we continue with the trend. And pullbacks should not violate our high lows. We want all the high lows to remain intact. The market should just be making a high low and then we go make a higher high. So the moment the market does this and we get candle body closure below this swing low that makes the high low, at this point, this represents market structure shift. So once you get this market structure shift, our reversal, this is the first confirmation or the first sign that a reversal is likely to happen. Then the next thing you expect that the market should retrace and not go violate this high for our reversal to be valid. So we need to see the market give us a retracement, then now we start breaking structure to the downside. So in this case, now you expect the market should be doing what? The market should be making lower lows, lower highs, lower lows, lower highs. So our lower highs should remain intact. We don't want to see the market violating our lower highs. So this is exactly how a reversal most of the time happens, and this is how you can anticipate a reversal to happen. So you're going to look at multi-time frame market structure, so you'll understand how all these come in play when you look at the higher time frame in relation to the lower time frame. So now that you understand the basics of market structure, I want us to look at market structure in relation to the different time frames that we have. So of course we have higher time frames and lower time frame. When I talk about higher time frame, a higher time frame is any higher time frame than the time frame that you're looking at. If you're looking at the 4 hour, the same thing. Any time frame higher than the 4 hour is a higher time frame, and any time frame lower than the 4 hour is a lower time frame. So I want you to understand and have that picture anytime I'm talking about a higher time frame and lower time frame. So we are going to use a bullish trend for our examples. So let's say you have a situation where you have a bullish market and this is a higher time frame. This could be a daily time frame. So the market is making higher highs, higher lows, higher high, higher lows, higher high. So we are breaking structure to the upside. So I want you to understand that when you have this bullish structure on the higher time frame, if you move to the lower time frame, the picture is different. So I want you to master this. A retracement on a higher time frame, if you look at it on a lower time frame, that looks like a reversal. And as the market goes to make a higher high on a higher time frame, just this one leg, on a lower time frame, you'll see there's a whole trending multi-structure on the lower time frame. So this is what I mean. So in this case, you can see we've already made a higher high. The moment you make a higher high, that is when you anticipate to see a retracement. So on this higher time frame, let's say this market will retrace, you're going to have a retracement to this level here. So we are going to mark a level here. This could be to a fair value gap, an order block. So this retracement here on the higher time frame, if you look at it on the lower time frame, you're going to see a whole bearish structure. The market's making lower lows, lower high, lower low, lower high, until finally the market gets to this point here. And on the higher time frame, as you're making a higher high, you're going to make this leg. On the lower time frame, this is what it will look like. You'll see a whole bullish structure of the market making higher highs, higher lows, higher high, higher lows, higher high, higher lows, higher high. So let me just move it to the side here. Okay, so this of course is a higher time frame and this is a lower time frame. So this lower time frame is this high and there's retracement on the higher time frame. As we get that pullback on the higher time frame, if you look at it on the lower time frame, you can see we get a reversal. You can see we even have market structure shift on the lower time frame. Then we get the bearish structure. And this is just a retracement to the higher time frame key level. So this is a situation where you will find the higher time frame structure is bullish, but if you look at the lower time frame structure, already the lower time frame has given you market structure shift, and already you can see we have lower lows, lower high, lower lows, lower high. And this normally confuses a lot of traders. If you don't understand higher time frame, market structure, and where exactly the higher time frame structure retracement could be getting to, you will get confused with this kind of structure, because you see, if you're just trading blindly, not understanding that this is just a retracement of the higher time frame, you will just now be looking for bearish moves, bearish moves, bearish moves, only for it later the market again will reverse. Once the market is done with the pullback on the higher time frame, the market will continue going higher, and you'll anticipate what? The market to go make a higher high. So this is what you want to see the market do on the higher time frame. So if you look at it again on the lower time frame, this is what it's going to look like. Of course, the first sign that a reversal is happening. So the moment we violate the high low in this case there, and we get market structure shift, this is a first sign that a reversal is happening. And at this point, we anticipate that this market should do what? That this market should now continue going higher. We want to see a bullish structure. This is why you'll see on the lower time frame the market making a higher high, higher lows, higher high, higher lows. And in this case, your target is what? Your target is this high here, because we know if a market is trending bullish and we are done with the pullback, the next high probability draw of liquidity, or the place we expect the market to go to, is to go make a higher high. And this is how you now get high probability trade setups. Once you understand this structure, and you're able to see this reversal happening on the lower time frame, at this point you can be able to take a trade at any point here on this lower time frame and have your target as this previous higher high, because you expect that definitely if you are trending bullish, this market should do what? This market should get to this high here. So that is it, guys. It's that simple. I have given you here a full trading plan on how you can use higher time frame market structure, take advantage of it, get entries on the lower time frame, and target higher time frame swing highs and swing lows. So I want us to look at the charts, and you're going to look at the monthly. We're going to start with the monthly time frame. So this is GBP USD. You can clearly see here this market is bullish, making higher high. We get a retracement to a fair value gap in this case. Then the market makes the higher high. We get a retracement, higher high. The moment we break structure here, of course, we make a higher high here. Then we get a retracement to this fair value gap here. Then now the latest price action, you can see here we make a higher high. Then we get a retracement to what? To this fair value gap right here. Actually, I want us to look at this. Once we made this retracement, as the market was making a higher high and this retracement here. So this is the kind of price action I want us to look at as the market was making a higher high and also as you were having this retracement here. So I want us to look at it on the lower time frame. So you can clearly see on the monthly, this was just one leg where the market was just making a higher high because this is where we broke structure to the upside. If you look at it on the weekly time frame, this is exactly what I was talking about. You can see on the weekly time frame already there's a multi-structure. The market is making a higher high, higher lows, higher high, higher lows, higher high, higher low, higher high. So when we're having this retracement again on the higher time frame to the higher time frame fair value gap that we looked at, if you look at it on this weekly time frame, which is now the lower time frame, you can clearly see that this market again, what is happening here? We've just made a lower low. We even have market structure shift here. At this point, this is market structure shift. Then we get this retracement here. You get that retracement, then we make another lower low. So all this was just a retracement to that monthly fair value gap that we looked at. So this is how swing traders are able to get long-term trades, because in this case you can see this is a retracement to a higher time frame key level, this monthly fair value gap. So if this market is going to continue with the bullish trend, and if the market is going to continue with the bullish trend, what do you expect? You want to see the market do what? You want to see the market do what? Make a higher high. So if that happens, then our target is where? This high here, because this is the higher high on the higher time frame. This is just a pullback. Then you expect the market will do what? Will go make a higher high after retracing to an internal range liquidity. So now I want us to forget about the monthly. I want us now to look at this weekly time frame. So let us look at this weekly time frame as our higher time frame. Then we move to a lower time frame and still look at the structure. So if you look at this retracement here, you can see this market here retraced to an internal range liquidity right here. And also this is an order block, all this. You can also see we had this retracement here to this internal range liquidity and the market made a higher high. Again, you can see we have this retracement to an internal range liquidity and this market has made a higher high. So I want us to look at this on the lower time frame. So the blue is the retracement on the weekly to the fair value gaps. So if we're going to look, let's even look at this here. You can see on the weekly we made a higher high. Then we get this retracement. At this point here, this right here will be considered market structure shift, and most people would be anticipating a bearish move. But if you understand higher time frame structure and you understand that this is likely a retracement to an internal range liquidity on the higher time frame, then you know that this market structure shift will really not push market to continue going lower. So you can see we get that. Then we continue with the bullish move. We get that retracement. We continue with the bullish move. We get that retracement and the bullish move. So I want us to look at this move here. Uh, this this move here. I want us to look at it on the lower time frame because clearly you know all this is just a retracement on the higher time frame, which is the monthly time frame. So you can see on the lower time frame, this is a daily time frame, you can clearly see there's a whole structure. You can see the market is making a lower low, get a retracement, make a lower low. Then we have this, all this was just a pullback. And then we continue with the lower low, lower high, lower low, lower high, lower low. The moment the market, we tagged the monthly, which is the higher time frame key level where the market was headed to, you can clearly see now we have a whole bullish structure. If you look at it even on the weekly time frame, this is just one leg. But if you to look at it on the daily time frame again, you can see there's a whole higher high, higher low, high, okay, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So there's a whole bullish structure that we have here. And if this market is to go make a higher high on the higher time frame as you had seen, this market should get to this high here. So we can still look at this on even a lower time frame. So I want you to understand, guys, it's the same thing. They say the market is fractal. What happens on the higher time frame also happens on the lower time frame. So this daily, if you're going to have this daily as our higher time frame, these retracements on the daily time frame, if you look at it on the lower time frame, you should see a whole bearish structure. Let us look at this retracement here. So you can see this retracement on the daily time frame to this daily fair value gap here. Of course, you can see on the 4 hour there's a whole structure. Although it's a bit constricted, this structure is a bit constricted, but you can see that this market is going lower. It's making lower lows, lower high, lower lows, lower high, until finally the market gets to this low here. And once we tag this low, again, as you can see, as we go to make a higher high on the daily, there's also the higher highs finally here. There's that structure making a higher high, higher low, higher high, higher low, then finally that higher high. Then we get a retracement. This right here, purple, is a retracement to a daily key level. Then we continue with the bullish move. You can see higher high, higher lows, higher high, higher lows. Finally, we go make a higher high. So I want us to see how we can look for high probability setups using this market structure and understanding higher time frame structure in relation to the lower time frame. So this is the daily time frame. So you can clearly see here we've made a high, you get that retracement, and then we've made a higher high. So this right here is where we get our market structure shift. We get that retracement. So now we've made a higher high. So if this structure is to still continue, if you're still going to continue with the bullish structure, we anticipate that this market will retrace to this fair value gap here. Then we continue doing what? We continue with the higher high. And in this case, our target would be this high here. Because if the structure is bullish, making a higher high should be where? Above this high here. We have to get to this high here if you're going to make a higher high. So now this is where you move to the lower time frame. So the lower time frame of the daily is the 1 hour. So if you look at the 1 hour, you can clearly see. So this is the market. This is what we have already. Price has tagged our daily key level. So now we want to see market structure shift. We need to see a willingness of price to leave this region after tagging this key level here. So we're going to play this. So you can see the moment we close above this high here, this here looks like a clear market structure shift, price leaving our daily key level. Then we get a retracement to an internal range liquidity. So we can take an entry from any position, any point here. For those people who understand ICT, this is a fair value gap. You're going to have your stop loss below this low here, and your target would be this high here. So this is a high probability setup, and that is because we are using market structure. We understand that this structure is bullish, and this was just a retracement or a pullback on the higher time frame, and now we expect a continuation after the market has already done what? After the market has already done with the pullback. And you don't really need to get all these move. You can even target all these highs here. You can have TP1 here, TP2 here, and the final target there. And then we can play this, and you can see, of course, if you're going to make a higher high, definitely this is where the market should have gotten to, because it's a higher high of the higher time frame. Also, when trading with the higher time frame, you can still counter trend. When the market, remember we said we normally anticipate a reversal once the market has made a higher high or a lower low. So in this case, once the market made a higher high on the daily time frame, and you anticipate a retracement or a pullback, you can still counter trend the higher time frame structure.